Hey there, how are ya? You're looking great today. Welcome to the Financial Fortress. And let's go over the couple of news that transpired in the market over the past week. It was again quite an eventful time. And despite the market being market and kind of bouncing over the bottom, it's a great time to buy great companies, right? Because as long as you fulfill that one simple criterion, you will do just fine. So, what was on the menu the past week? We'll be talking Polestar, annual letter from Jamie Dimon, Elon Musk buying Twitter, SOFI getting slightly destroyed, Warren Buffett and his new position, this time in tech company, and Tesla had a big event, Cyber Rodeo. So let's get into it. Hertz, Polestar, Tesla. What's going on? Hertz Global is a rental car company, right? And they inked a deal with a Swedish EV startup Polestar to supply them 65,000 vehicles over the next 5 years. And that's after Hertz already signed a deal with Tesla to have 100,000 cars delivered. So, basically, Hertz just pulled the second card, second ace from their sleeve after the deal with Tesla generated lots of free press, lots of positive excitement. They just did the same trick all over with Polestar, which is probably very both kind of a good and bad for Tesla, right? Because it just seems that Tesla is not able to satisfy the demand, right? They are ramping up all their factories as much as they want, but there are companies like Hertz, they would just love to have more and more of electric vehicle, but they are not able to get them, right? So they are trying to pull them from all the different sides they are able to. And Polestar is actually quite a decent company, right? It's one of those EV startups that already actually has some substance behind it, right? Because Polestar, it's basically Volvo, right? Quality Swedish engineering. They have the people, they have the product. They are able to actually deliver vehicles, right? Compared to some other names, I won't mention them, but we all know who I'm talking about. So basically, what might transpire over the next couple of years. Hey, you want to rent an electric vehicle through Hertz, might be Tesla, might be Polestar, but basically they are trying to electrify their whole fleet, and that's just very positive for electric vehicles in total, right? They are just crushing it. The EV demand and the productions are just through the roof, and at the same time ICE vehicles are basically through the floor. No one wants them. They are baggage and burden of the legacy automakers. uh, so yeah, I mean that's the big trend, right? And it's up to you to obviously capitalize on it and embrace and be aligned with those super trends. So that's the first piece of news for today. We live in very interesting times considering the economic global market, the logistics, obviously the supply chains. There has been so many disruptions, and here are some of the stuff that Jamie Dimon, basically the goat of the banking in the US, outline in his annual letter, and my take on some of those. Because obviously on a super big scale, we've been through a huge systemic shock that started in 2020 with the whole COVID pandemic, where we basically did like a hard stop on the whole economy, supply chain. Everything got super disrupted. We pumped a lots of money into the system, right? The J Powell was just crazy with that printer. And the shockwaves from all this are rippling through the time all the way up until now, where obviously we are just getting more and more stones being thrown into the pond of the global market, with obviously the crazy war that's happening between the Ukraine and Russia. So there are certain key aspects that we need to consider also in the respect of, okay, are we going to have some kind of a recession, slowdown? Is it going to be this year or the next year? So basically, one of the stuff that Jamie outlined was that the US economy is still strong. The numbers for employment are obviously super powerful. If you actually go outside there is so much going on. If you go to a mall, if you go to a restaurant, people are so fed up with being locked down for already a couple of years, that especially now going into the summer with all the lockdowns easing, uh, it's predicted that this is going to be a really great summer for lots of obviously travel and leisure related stocks companies. So in a sense, it's seems like the US is in excellent financial shape. um, but the point number two is that uh, obviously with that systemic shock, money in the system, the inflation is just out of Fed's hands, and this will most likely require aggressive rate hikes. That's kind of the big elephant in the room, because inflation needs to be stopped and managed, right? And that could happen through managing of the supply chains or aggressive rate hikes. And it seems that the supply chains are going to get even worse with everything that's happening, right? Which is kind of tied with the point number three, the war in the Ukraine, which is disrupting commodity market in a significant manner. And some of the key elements, you can talk about the lithium in the EVs, or other stuff. Obviously, we have kind of the food related commodities like wheat, which again, like these will be systematic shocks that will kind of ripple. And uh, economy is just super hard, especially now in the global world. Everything's intertwined, so it's just super hard to predict any of these. So we are basically having these forces that are fighting kind of against each other. So we are now having this unprecedented moment in history, which is basically point number four, where at the same time there is a converging of that pandemic fueled stimulus, rising rates, sanctions towards the Russia, war in the Europe, and that's just like super combustible mix that it might transpire in any possible manner, right? Maybe we will just kind of get through it. The second half of the year might be relatively smoothly up. Might be a soft landing with the rate hikes if Jay Powell and the rest of the Fed can juggle all these balls in the air at the same time. But at the same time, if any of these aspects get just like a little out of the hand, it might spiral really quickly. So dangerous time and really unpredictable, right? So kind of the last point that's most important, and obviously it's intertwined, the economy and the politics. And now strong leadership is more important than ever before, right? Especially with the US, with basically the top world power, in which is kind of being at the same time challenges, right, by many different other players, obviously with the China. So we really need a leadership in the US that can have a tight grip and clear vision, kind of going forward, with obviously the election kind of looming in the second half of the year. It's going to be really important to ensure that democracy and freedom still prevail, and basically the Western world can work out or all these complexities, and really make sure that we can get out of this mess stronger than before. Elon Musk has been steadily buying Twitter stock for quite some time now. And it was obviously below the radar, right? Because he kept accumulating share before he reached a threshold of 5%, when he would need to basically, publicly declare it to the SEC that, okay, hey, now I'm having big enough stake for everyone to know. Um, and he kept accumulating after that. After he had basically like a 10 days to let the world know that he has accumulated this 5%, but he did not. He kept buying. So kind of he's having that struggle obviously with SEC that's going after his neck for quite some time, which in a sense is justified. We are having certain rules that should be followed, but at the same time, many of those rules are plain stupid. um, And so, I don't want to be the judge of this particular manner, but basically that's what transpired, right? Elon Musk ended with 9.2% stake in the entire company. And in a sense, like, this is the typical billionaire playbook, right? Elon Musk, he's always playing like a four-dimensional holo chess, where all his competitors are basically, playing checkers. So in the world where Jeff Bezos, a couple of years ago, or when was it, bought Washington Post, or like a big stake in it, um, which in a sense it's a little meaningless. We're kind of past that point, obviously, with like the traditional media. And obviously, if you look at some of those articles from Washington Post, they are always slamming Elon Musk, because these two billionaires are uh, all the time kind of poking at each other, because they are kind of fighting on that number one, number two spot at the richest person in the world list. And Elon Musk is clearly winning the past basically year or two. Um, and also because he's always a couple steps ahead, right? Because the social media, that's the new stuff. Newspaper, that was the thing of the past. That was a viable option when Warren Buffett was buying some of the media, in the 70s, 80s, 90s maybe. But we're past it, right? And Twitter now is a big world town hall. Twitter is basically positioning themselves as the place to get the news, right? Really bite-sized news, pieces of information from clever people, let the ideas flow, and kind of establish, in a sense, get the feel of what's the zeitgeist, what's the way where the society is heading. It's a platform used by lots of very clever and successful people to kind of exchange ideas among each other, and it's a place for also lots of smaller communities. So in a sense, as a social media, it's really successful, since it's really creating interesting connections, and at the same time it's a place where these ideas can flourish. On the other hand, as a company, it's not as successful. It's really underutilized in terms of how the Twitter is monetized, um, which kind of makes for nice arbitrage opportunity for obviously Elon Musk, right? Even though I would probably assume that really like the main goal of Elon is really to, it's in a sense it's not a business case per se for him to like make money. It's for him it's just like tiny fraction of his overall net worth, right? It would be the equivalent of me buying $1,000 worth of, let's say, whatever, Facebook, right? uh, but for him, Twitter is a platform where he is being very active, and it's almost basically like a Tesla's marketing, right? So it's not really in a sense to make money from the Twitter itself, but to solidify his position and secure that his voice can still be heard on the platform, because that's where his supporters are. That's where Tesla is giving lots of both positive and negative attention, but in any manner, any attention is good attention if you are a business, right? Um, so that's basically it, right? Elon Musk just really went full speed ahead. He is now on the board of Twitter, and he is already making some changes. And if you would basically point the gun to my head, I would tell you that Twitter is probably going to do very well also in terms of the overall business, the revenue, the stock price. Basically, everything that Elon Musk touches turns into, well, if not gold, then at least silver. So I expect really positive things to happen. And at the same time, I think this is a very good uh, thing for the sake of democracy and ensuring the free speech on the platform, and overall making sure that different voices are heard. And I really hope that this will be a positive outcome for the democracy, especially in the US. President Biden is throwing another bone to student loan holders this week. They just extended the moratorium for the student loans that was originally supposed to end on May 1st. They extended it to August 31st, giving loan payers an extra 4 months to get ready for the payments, which hurt one particular stock, and that was SoFi, right? Because that's a company that's really trying to um, capture lots of these young people, right? Kind of lock them in and make them customers for life. So SoFi is definitely stuck with lots of people on the bull side that are really enthusiastic about it, about the new ways they are basically making the banking kind of the sexy in a way for young generation, really seamless, bundling all the different stuff together. And extending the student loan moratorium will kind of put a dent in SoFi's profit and sales over the coming months. And perhaps even worse, it lowers the investor excitement since many were expecting the moratorium to officially be over in May. So, in the outlook, SoFi said that it now assumes that the student loan moratorium will not, in fact, end during the course of 2022. So, we are actually expecting that, maybe the moratorium can be put even further. That's kind of a big dent in SoFi since they were managing lots of those. And SoFi basically cut the guidance for 2022, right? They are now expecting the sales of 1.47 billion and adjusted earnings of 100 million. So that's basically 100 million less in sales and 80 million less in the earnings. So, that's quite a big dent. So, Wall Street is kind of worried, and it's obviously a big short term headwind. However, SoFi is still a really great company, and SoFi CEO Anthony Noto is still staying positive. So just to kind of quote him directly, he said, "SoFi remains incredibly well positioned to drive continued strong growth in revenue, members, and products, along with continued and improving profitability, despite the fact that our student loan refinancing business has operated at less than 50% of pre-COVID levels for the last 2 years." So, big headwind, but at the same time, the company and the thesis behind it, it's still in a sense unbent, unbroken. It's just puts the whole improvement a little bit on a back burner, and it will just slow down the adoption curve, right? So uh, you know it might hurt the stock price in kind of the short term, and by short term I mean, could be a year, could be a two. But for the long term, I think SoFi is really positioned well to capture lots of these young customers, kind of millennials and down, right? Especially, kind of a generation Z coming as well. So let's see how this transpires, and I have a big belief in Anthony Noto. He is a great CEO and really forward looking. So let's see what he has in store for the coming years. Hewitt Packard is Warren Buffett's new stock pick, which, in a sense, almost seems like, like what the hell is going on. Warren was never much into these tech plays, but as you can see, I mean, it's really painful for me to say this since I really admire Warren and I've read his biography extensively. Like the amount of stuff he has achieved over his lifetime, that's something nothing short of extraordinary. But then again, like these days, he's basically betting on things staying the same, as a value investor, kind of the long term value and compounder. Um, so by that I mean, I do not want to say that this is necessarily a bad pick, but it's something. Basically, Hewlett Packard was, it's obviously it's tech, but it's kind of the old tech, right? It's a hardware. It's kind of long time being here, well established company. uh, you know in a sense, it's super undervalued, right? If you look at like kind of the value investor metrics, we have a P ratio of less than 7 with a dividend yield of 2.59. I mean, that's just like insane from value investors perspective, right? It just really seems that like the for one reason or another, and I haven't looked at the stock at like super high level, so what I'm telling you here, it's kind of really first impression based on that news. But yeah, like this is something that might appreciate very nicely, right? We are having the eponymous Warren Buffett's margin of safety with such an insanely low valuation in a sense, and frankly, like Hewlett Packard, they are making a really decent product, and actually the laptop I'm using is Hewlett Packard. I'm very satisfied. I have had it for over 3 years. So I mean, in a sense, I see nothing wrong with the pick, right? If you are a value investor, Hewlett Packard is very healthy company in a good space that will very likely do quite good over time. It's not some crazy banger that might 2x 3x. It's not the type of the stock I would be excited about, but I definitely see the appeal for for a guy like Warren Buffett, right? So he's just basically jumping on that tech train with a little bit of like uh, I wanted to say late, but of course it's not late in a sense. He's just looking for those deep value plays, and there is nothing wrong with that. And with obviously his the sheer scope of the portfolio he's managing, he just he has to go for a hunt for elephants like Hewitt Packard, right? So he basically scooped up 121 million shares, which that's basically 4 billion, roughly 11% of the entire company. um, so like I mean, what else is to say? And the shares of Hewitt Packard surged 14.77% on the day where this was announced. So that's like a value investor's wet dream that you know Warren jumps on your train and basically validates your own stock pick. So it's just super tough to be Warren these days, right? You are just like all of your moves are very closely watched, and as soon as it's revealed that you put your weight behind something, it's just makes this insane move like immediately, right? So if you are a value investor, you just want to have Warren Buffett on board. If you are a Twitter investor, it was just something amazing to see Elon Musk jumping on your train and taking the board seat. So sometimes when these whales make splash, it's a big one. When you imagine a billionaire, right? What do you imagine, or how billionaire should look like, how they should act like what would be your take? Let me know in the comment what's your image of a billionaire. But in my book, like Elon Musk is obviously the guy, right? I don't know if you've seen the Cyber Rodeo event that transpired in Austin, Texas, in the new Tesla headquarter. A big opening party to celebrate, the obviously the big achievements of Tesla, as well as tease some of the coming products and a little bit get an update of what's kind of happening. So Cyber Rodeo. Elon Musk, riding on the stage, cowboy hat, aviator sunglasses, graphic tee. It was it was just extraordinary. And he spoke about the new Austin factory's capacity, production plans, and also teased some new Tesla products that are still in development, right? So basically, the big plan is to produce 500,000 of Model Ys per year in Austin, and the factory is ramping up, and they still have lots of positions open. They really need to hire an insane amount of people, and also train them, do through all of this. Obviously now they have the roadmap, how this ramping up should go. but there is still quite a lot of work that needs to be done, right? So I don't expect that it's going to be, like something instant. It's very likely to kind of, go through the rest of the year until the factory can be actually ramped to the full capacity. And when everything is ramped up, then Musk expects to begin selling the Cybertruck there next year. Uh, but again, kind of, ramping up Cybertruck, it's just completely different vehicle, right? I mean, that's completely out of this world. Um, like the whole exoskeleton thing. It's going to be definitely a different kind of a challenge, right? So, even though, like with Elon Musk, it's always the next thing is coming, just, kind of at 50% extra to like his own time estimate. So in a sense, I wouldn't expect Cybertruck to be kind of ready in some kind of normal level of production until at least the half of 2023. Um, so that's a little bit of the caveat of everything, right? And obviously, with all the shortages and the supply chain disruption or all over, uh, it's going to be another challenging year for Tesla. However, it's even more challenging for everyone else, and here comes like the big, in a sense, bull case for Tesla, because since Tesla is taking care of, as much as possible in house, like extremely well vertically integrated, um, any event that is hurting automakers is hurting Tesla significantly less than others. Meaning, this is in a sense headwind in a short term, and by short term, could be year, could be two, but it's a huge tailwind going forward 3-5 years out, because it just means that all the legacy automakers and ICE vehicles are dying at much faster rate than the electric vehicles, right? So uh, it will just mean that the market share expansion of Tesla is just going to accelerate faster than it would if we haven't seen any of these disruptions. So you always have to find the silver lining of all the clouds. And then for another stuff that basically transpired over that cyber rodeo event, Elon Musk again mentioned the Tesla bot, obviously, right, which is supposed to be basically like a general multi-purpose machine capable of doing basically anything that the human is able to do, with kind of hands, kind of the simple motorics, and they can replace humans in lots of kind of boring repetitive tasks, something that requires kind of the raw, in a sense, muscle power, um, which in the long term, in Elon's vision, that might bring a really time of a great abundance. Obviously technology is, the more technology we have, the more products, it just makes everything more accessible for everyone, right? So, like the way we are living today, even, like a super normal, or, like at whatever stage level of society you are doing much, much better than people were, 100 years ago or 200 years ago. And that's all thanks to technology. Technology just, if you improve, you make everything cheaper, more accessible for everyone. So in the long term, this is definitely something that can, just like make the scale of Tesla like totally like insane levels, right? But of course, there is lots of engineering, lots of development that still needs to be done. And again, as with everything with Elon, he's very optimistic about the time frames. So he's basically saying that there should be some kind of a, pre-production prototype next year, but might be super crude in my opinion. It might come later than expected, but it is going to come and it's going to be awesome. At least that's what Elon is basically proving again and again, that he can deliver. just the timeline is always super arbitrary. So I'm looking forward to the Tesla bot. I'm looking forward to, obviously, also other stuff. The semi is also probably coming at certain point, but again, like, it's about timeline. And it also meant that with all this disruption, Tesla was just focusing on massive scaling, producing insane amount of vehicles because the demand is just through the roof. As I talked in the previous segment with the Polestar, we just need as many of these vehicles as possible, because basically, all the other automakers, their sales are through the floor, and Tesla needs to basically replace all of this, right? Then they just can't keep up. So there are going to be hiccups. There is going to be, probably the stock price might drop in a sense, maybe even in a significant manner in the short term, right? As we are seeing lots of these disruptions, what's going to happen if some plans get pushed again, kind of further. Market always reacts to kind of the immediate news, but in the long run, 5 years and more out, the Tesla thesis is just getting better. Okay, folks, that's all for today. If you've managed to listen to my rambling all the way up until this point, you are freaking awesome. I love you. Give me a comment down below, subscribe, like, the usual stuff. Connect with me on Twitter, just Google my name or something. I would like to hear your opinion about any of the stuff I have mentioned. And keep being awesome. Take care.